Will a trade war crush the Chinese economy? Unlikely, said a panel of experts speaking at the Fortune Global Forum in Toronto on Monday. The US-China conflict, it's not a positive, it's not something that is going to help growth in China, but neither is it going to necessarily impact the overall macroeconomy, said Jonathan Woetzel, a senior partner at McKinsey and director of the consulting firm's McKinsey Global Institute. He explained that much of the trade war's impact falls on global corporations that do manufacturing there, accounting for 40 to 50% of Chinese exports, and 70 to 80% of exports from the targeted machinery and electronics industries, and that the impact on China is actually very minor. He noted the stakes are higher for regional economies like those of Taiwan, Singapore and Malaysia. As for China, the U.S. consumer is probably a much bigger factor than the U.S. government in terms of the growth of the Chinese economy, he said. The Chinese consumer is of course a major factor too. He notes the future growth of the country's economy depends more than anything on them and their continued appetite for goods and services. 80% of China's economic growth has come from consumer activity, Louisa Chiang, CEO and vice president of Hong Kong-based Hang Seng Bank agreed, noting that consumer power is not limited to crazy rich Asians, but millions of citizens who make up China's fast-growing middle class. She added that she sees more and more foreign companies interested in China-based Sinabeshalas, founder and CEO of Rock Creek, a global investment firm, said that she is very optimistic about the future of China's economy. She expressed confidence in the government's decision-makers, most of whom she noted spent time at international financial institutions like IMF and the World Bank and have knowledge and respect for such institutions. Pointing to the quick, successful rise of companies like Chinese internet giant Tencent, she said she expects China will soon be leapfrogging all of us.